Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264. Are you a stock market investor without all the information?
What are you, nuts? Market's going up, market's going down. We're getting all this bad information.
How do you invest intelligently? Phil Grande can show you.
If you want real information and you really want to know what the market's going to do and you want the truth, go to my site, philsgang.com, and also listen to me on my radio show every weekday at 3 o'clock Eastern.
Phil's got the answers at philsgang.com.
That's philsgang.com, where you get the truth and you get the information you need about the market.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Sign up for a 10-day free trial to see our platform in action. Learn more at philsgang.com. That's philsgang.com. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially in the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grande at philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day it goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Our administration has driven an historic economic recovery. The U.S. economy is strong.
The U.S. economy is amazingly strong. The jobs figure was a momentary panic, which is fading.
Recession warning signs are not flashing. Leading indicators of the economy are slowing a bit, not collapsing. So it suggests a fairly resilient economy.
The economy is strong. How many times we've been hearing that? The labor market's strong. It's never been strong. You know, everyone forgets what's held this whole market together. We're a handful of stocks since 2008. Zero rates. And what was amazing, for 15 years, they're able to turn around, print all this money, which is terribly inflationary, to buy bonds, treasuries, I'm talking about the Fed, so they could force yields down, interest rates down, so you could cut rates. And when you do that, every time you cut rates or force rates down, what happens is oil prices go up. And oil is in everything. Everything. I mean, from lipstick to tires to trucking to it's the economy. So the tremendous amount of money printing was inflationary. And all of this for 15 years, they didn't care about the economy. They didn't care about Main Street. They cared about one thing. Let's Wall Street, let's in the top 1%. Let's just take, after this 2008 crash, let's just get our money back. Let's create our wealth. Never mind Main Street. Let's just get out there and print, and we don't care about inflation. And then that was 2008. The market was going up so fast because of stock buybacks and zero rates. 2022-23, all of a sudden the AI craze starts. That went nuts. And you had tech stocks going straight up, even though interest rates, in the best thing to look at, from October 2022 to today, as rates went up, the tech stocks ignored it. And high rates for tech stocks are death. Tech stocks need a lot of cash, heavy cash burn. I mean, they keep burning cash. They need to keep borrowing. And they didn't care. The AI tech craze just kept rocking along. And they didn't care what rates were. But now it's catching up. It's catching up. In the market this week, right now, this is the worst week since March 2023. And they keep telling us that, oh, the labor market's strong. The labor market's strong. The labor market's not strong. It hasn't been strong. So let's just think about it for a moment. If the economy was so strong and the labor market was so strong, then why fudge the numbers? There's no reason to fudge the numbers. Why would you fudge 800,000 numbers and 813,000 jobs rather? And don't forget what happened in 2013 or 2023. We had 11 downward revisions. 11 months. There's only 12 months in a year. 11 of them. Downward revisions. They keep faking these job numbers out. So the economy was so strong. Why fudge the 813,000 job numbers? Why in 2003 have 11 revisions? If the economy is so strong, why are savings down from $2 trillion to now negative 72 billion? Why are wages under Biden 8.1% lower than under Trump if the economy is so strong? The hell are they talking about? Why has personal income, just got these numbers last week, how come, if we're so strong, personal income has dropped to 2.2 while spending is at 0.3? So people are still spending more than their income because all they hear is soft landing, soft landing. This is all they hear, this crap right here.
This is the about face that the bulls were waiting for. It's the comeuppance for the myriad bears who never embraced the possibility that Powell could engineer a soft landing, a terrific soft landing. And this one's so soft it barely counts as a landing at all. That's a lot of nuts!
That's a lot of nuts. So when you hear, and you have a couple credit cards, and you can hear from dopes like him how strong things are and how strong the economy is, and when you hear from our own Yellen telling you, hey, everything's okay, people go spend, keep using their credit cards. They spend more than their income because they know they got credit cards. They went through all that savings because they know after the savings go, they have their credit card. And then when the retail numbers came in, everybody go, look how strong the consumer is. Look how strong he is. He's spending more money than his income. And they consider that strong. They really do. In fact, I think I have a cut from that. How fun. Go ahead and play it for me. Listen to this.
People are feeling flush in their accounts, spending more than our income coming in.
Now, that was right before the 2009 crash. And they're saying the same thing now. When you hear them on all these financial TV shows, they're saying the same thing. Look how strong they are. They're spending more than their income. See, they just like every time these tech stocks would go up, because they would buy treasuries. And when you buy treasuries, what happens? You're dropping yields. Yields go down. That's not a good thing. It's good for tech stocks, as I told you a moment ago, because they burn a lot of cash, but it's not good for the economy. You don't want yields going down. You want yields going up. Yields going up means things are good. It means people have confidence. When people don't have confidence in the economy, what happens? First of all, small businesses start laying off. Big businesses then start laying off. There's nothing good about having having these low rates, especially when you keep on buying these bonds to purposely get these yields down. You're killing the economy. But the economy looked great because, think about it, all the wealth has gone to one group, the top 1%. From 2008 to 2024, their wealth increased by, as an aggregate now, I'm talking about the whole group, $23 trillion. $23 trillion. Amazing. Most of their wealth is all in tech stocks. Tech stocks. How'd they get there? By killing everybody else, by making Main Street suffer, by buying bonds to drop yields down. And when you see yields going down, what does that tell you? It tells you the economy is in trouble. It tells you things aren't good. And so then what happens? Small businesses start cutting back your hours. That's another thing I love about this administration. They'll say, or any administration, they'll say, oh, look at this. Wages are up. Wow, wages are up. But what they don't tell you is they cut your hours from 40 to 20. They also tell you, oh, look at the sales. They went from $2,000 this week, or $2 million to $3 million. What they don't tell you, it wasn't consumers buying more. Consumers didn't go and buy $1 million more, $1 million more than they did last time. No, that was inflation. Prices went up $1 million, but they don't tell you that either. So let's just take a look at the real world. If the economy is so strong, why are savings down from $2 trillion to $65 billion? Why are wages under Biden 8.1% lower than under Trump? Why has personal income dropped to 0.2 when personal spending is 0.3? Why are credit cards at historic highs? Why has the 5 largest banks come out and say, you know, out of the 17 trillion household debt, we're in trouble. 4 billion of the 17 trillion is not collectible. We can't collect it because the consumers simply, our customers simply don't have the money to pay. If the economy is so strong, then why has bond yields been tanking since April 2024? You follow the bond market because the bond market always tells you the truth. Wall Street's not going to tell you the truth. These financial shows don't tell you the truth. The bond market will tell you the truth. When you follow the bond market and you take a look at the yields and the yields are going down, it means no, the economy sucks. But when you have AI craze and stocks are going straight up, people think, wow, the economy's a wonderful thing. Look how strong we are. They don't even know what the bond market is. The one thing about the bond market, it will tell you the truth. These guys on these TV shows aren't going to tell you the truth. You think these guys on the financial shows are going to tell you the truth? Go to the bond market. The bond market always tells you the truth. Here, let me show you what I'm talking about. I mean, it just drives me crazy. I mean, these people are just nuts. They're all nuts, every one of them. I've never seen such lying going on. Let's see if I can find this thing. So, where did I put this? Hold on one second, guys. I'll get it. I should organize. Here we go. Okay, sorry about the inconvenience. All right, here we are. So, this is the bond. This is your yields right here. See when the yields come down? When those yields come down right there. First of all, if you're in the bond market, okay, and the yields are coming down, you're making money, right? But when the yields come down, and people go buy bonds because they're scared to death, they don't want to be in stocks, so they buy bonds. But when those yields come down, that's when tech stocks soar. And tech stocks have been soaring. Here, look, tech stocks have been soaring, going crazy, because what have they done? They made sure yields went down, but that's not a good thing. So the only way they could push the stock market up from 2008 to where we are today with low rates. And right after COVID, they dropped rates to zero again. And look at the inflation. The day that we had the inauguration, right? Biden's inauguration. Let me show you here. Inflation was up 1.4%. 1.4%, right? By the time we hit July 2022, this was after he executed his American Rescue Plan. Let's see if I can get this a little bigger for you. American Rescue Plan. After he did that, and then he shut down Keystone in June 2021. So he was elected 2021. He executed the American Rescue Plan, which, by the way, is about 68% of the pain we feel with inflation. Right after that, June 2021, I mean, like months, like 3-4 months since he got elected, he shuts off the oil. And then by January 2022, what happens? Inflation's at 7% from 1.4%. Oh, and it's not, and believe me, he never said it was because of gouging. He never said it was because of gouging. He didn't put up a bag of potato chips, say, look at the potato chips. They're all there. He didn't say anything. He didn't say that. And then what happened? When that inflation got to 7%, he panicked. Biden panicked. He goes, we got to raise rates. We got to raise rates. We got to raise rates. That's what they did. They raised rates. And so the market started to tank because what? The only stocks that drove this whole market were tech stocks. And when he starts raising rates, what happened? All of a sudden, bam, the market drops. Now, From January 2022 to July 2022, because he raised rates, the market went down about 25-30%. But guess what? Over the 18 months that he's been president, January 2021 to July 2022, inflation's at 9%. This is after he raised rates. See, my point is, no, the economy's never been strong. You can't have a strong economy when you keep printing money, because printing money is inflation. And when you keep printing money and printing money so you can buy bonds, so the Fed can buy bonds to drop interest rates down, to push the tech stocks up. So it's a very small group of people who have all the wealth in the country. The top 1%. Top 1% in their portfolio is $23 trillion of profits. That's their tech stocks. Tech stocks. Very small segment of the population. That's their 23 trillion, their portfolio. All of it's tech stocks. But they're starting to run into trouble, though, with inflation, right? So when we get back, we'll finish this up. And I mean, so when next time you hear how strong this is, the economy is, and labor market, they all been lying to you. What's next, though? I'll tell you when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like
market.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Remember, you can join my gang. 10 days free. That's right, 10 days free. And if you look, for 10 days, you'll get our whole, again, let me pop it up here for you. Here's our trading, and here's our training courses. Okay, you got 10 days, you got the beginners, you get the pattern recognition, advanced. So these are available for you during those 10 days. And you're going to be in our classroom, you're going to be getting our stock picks. And I'm telling you, for 10 days, you're going to come out and you're going to say, God, I wish I did this long ago. Because you're going to learn how to sell short. See, most people think, why do I got to short for? The market will never come down. Most people think the market will never come down again. For 15 years, this market's been going up. Don't forget, though, we've had corrections over those 15 years. Okay, but the biggest correction is coming shortly. Now, again, I think between now and the election, and I told everybody this, let me show you. I said that between now and the election, I think what will happen is we'll have one more pullback before we get that one big rally, okay? Right here, we're going to get one more pullback. And I drew this in for my gang members. I'll do it for you right here. This is the trend we had going right here. And if you remember, this is where we had that big, we went down 2,000 points in a few days. Then we had this big rally right here. And right there, we were hoping it was going to break and drop. But I forgot what happened. I think it was the labor market that came, something happened with the labor numbers. But it shot right through. But now we're on our way back down. exactly where I predicted it. I said it would come back to here. Even though it didn't stop here, it went through there. I predicted it would come down to here. Or I should say, not predict, but I gave a high probability. Then I think what will happen, they'll run this market up one more time to get right up to here, okay? So they can get Harris into office right there. They'll run this market up, okay? And not just Harris, they got to get all these senators in. They got to get all these House folks in, the representatives. So I can't imagine they're not going to run the market, okay, going into the election. However, let's go back to what we were talking about a moment ago. Let's talk about the labor market. Let's talk about the labor market. This is amazing to me. Listen to this. The lying is incredible.
I do wonder, though, I know, listen, again, we always talk about the jobs number. I get it. It's a big deal. But then when they revise it down 818,000, you kind of wonder, why are we paying so much attention to the jobs number, Roger, when they keep revising it down?
Yeah, you think? You think? They never tell you the truth.
But the thing that concerns me the most is the labor market. I was kind of surprised how many people just brushed off that big downward revision to, the initial benchmark revision to payrolls for the year ended March. I'd been expecting that. We were thinking it would be something like negative $1 million. If you just apply that growth rate to the small business component of employment, which of course they guesstimate every month using the birth-death model, you have employment growth below 1% now for the private sector. The last 3 times that happened, in 90, 2001, and 2007, we were either in recession or on the verge of recession.
I don't know why he was so surprised, because remember what keeps this whole stock market going, okay, again, is cut rates, keep cutting rates. That's all they've been doing for 15 years. This whole market has been based on cutting rates. And remember, the Magnificent Seven, that's what they live off of. Remember, tech stocks burn cash. They need a lot of money. They have to borrow and borrow and borrow. The only one that doesn't borrow is Apple. So these cash burners, all they had to do is keep getting those rates down. And so they fudged this whole rally for 15 years on Magnificent Seven, and when it was already almost ready to give it up, then they came in with the AI. Everybody went nuts. So I'm surprised that he was surprised about they ignored the 813,000 fake numbers. I wasn't surprised at all, because nobody cares. As long as NVIDIA was going up 50,000% since 2009, do you think they care? Do you think they care for a moment that in 2023 they made 11 revisions out of 12 months? 11 months. You think they cared, or you think they questioned it? What are you, nuts? Do you think they questioned Powell when he went before Congress and lied and said that he wasn't increasing, he only increased the money supply from $9 billion to $12 billion, when that was a bold-faced lie? He increased it from $9 billion to $19 billion. And then he kept saying, inflation's coming down, inflation's coming down. How could inflation come down when you keep printing money to buy treasuries to get rates down so you can push tech stocks up? And then so everybody thinks, wow, this is great, right? The only people who were making money were the top 1 percentile. That's right, the top 1%. If you look at their portfolio, they have $27 trillion in their portfolio. It's all tech. That's where all the money went to. Main Street got screwed. And Powell would say when he went before these idiots in Congress, and boy, is there some idiots in Congress. Ever see these, when they have these hearings? I said, how did this guy get elected? How did they get elected? My God. If this guy was a dog, and in one of these kennels where, you put your dog and hope somebody, adopts him, nobody would adopt him. They'd put him to sleep. I mean, it's unbelievable how stupid these people are. And so when they sit there and lie, I mean, the IMF comes out and announces that our economy is growing the weakest in 30 years. Think about this. In 15 years, Our economy has grown 1.4%. Why, our inflation was double that. It was almost double that. Let me repeat. Think about this again. Economic growth. We weren't growing over 15 years, but it looked like we were growing because the Magnificent Seven stocks were going straight up. And then every time you talk about a bubble and the market's going to crash, oh my God, they'd come at you. Anybody, when you say, I think we're in a bubble, we may have a crash, oh my God. I mean, really, they come at you. I mean, you're like the enemy. In fact, it got so bad for me, one of these guys that worked for Trump on his security team called me, wanted to know if I wanted to hire him. I said, you out of your mind? Yeah, I'm going to hire you. Only kidding. So this is just crazy. So these cash burners got what they needed, low rates. So it's over now, okay? So it's over now. So they're going to cut these rates at the worst time. Can you imagine? That's why you're seeing this sell-off. That's why you saw the sell-off the day we came back from Labor Day, that Tuesday, 400 points. Because it's the old story, buying the rumor, selling to the fact. The smart money knows what's going on here. They know the more they keep cutting, oil prices are going to go up. Inflation's going to go up. He keeps saying he's going to blow right through his 2%, no question about it. And then he's going to turn around, this thing's going to soar. We'll be right back to 9% again. So to say that our economy is strong is insane. To say our labor market is strong is insane. The only thing that's been strong is the printing machine. The printing machine. That's what's been strong, not the labor market. The printing machine must work out every night with barbells. Because look at the money. Look at the increased money supply. From 2008 to where we are today, the increased money supply went from 7 trillion to 23 trillion. 23 trillion, the money supply. See, inflation comes from government spending. When I hear they're going to go after the supermarkets that make 2%, are you nuts? It's government spending. They're the problem. And when you take a look at where all the inflation came from, oh my God. Here, take a look at this. This is an old reminder. This is where it all started right back here. See? This is where it all started right here. In 2008, right there. They started to print money. And they printed $1 trillion to run the market up, okay? They had an 80% rally, okay? They tried to run the market up 80% from November 2008 to March 2010. 80% they ran up. And the only way they could do it is to print $1 trillion and to go and buy bonds to drop yields down, okay? Then they printed another $650 billion as the market started to pull back. That was in November 2010. Another $650 billion. Then they printed another $400 billion, so the market would go up 28%. That was in 2011. Then they printed another $1 trillion in 2012, all to push the market up. And how would they do that? By buying bonds. And when you buy those bonds, what happens? Yields go down. Take a look at this. And by the way, if you really want to know how to invest in stocks, they make it so crazy, so hard. And it's not that hard. What you got to do is you got to follow the money. Whoops. Give me a second here. All right. My little thing here froze up. That's all right. All right. Let me just see if I can get this to work. All right, I don't need it, I guess. All right. So the idea since 2008 has been one thing. Let's get the money back for the wealthy, who they lost money too. And they've been able to con everybody that the economy is growing. So again, now the truth's out. The economy grew 1.4 or 1.4%, I think it is. 1.4%. Can you imagine that in 15 years? What's that tell you? It's telling you we're heading for a crash like we've never seen before. The crash is going to be bigger than 2008. Now, do I know when it's going to happen? No, I can't project that because, we never seen the plunger team, as they call them, come in every day and push this market back up, keep pushing this market back up. And that's what they do. Every morning they go and buy, early in the morning, they buy futures. So that, like tomorrow morning, I'll bet you, or tomorrow's Saturday, I'll bet you Monday morning you wake up and it'll show the market's up 125 points, between 65 and 125 points. Mark that down, and you'll see I'm right. Because what they'll do is they'll go in the morning, the plunger team, and they'll go and they'll buy these futures to push the market up. And then the next thing they're going to do is they're going to turn around and they're going to make sure to keep pushing the yields down, keep buying more trade, keep pushing those yields down to make sure there's enough money, or it's a low rate money, so they can keep pushing this market up with low rates. But the game is over. It really is. It's really over. So if you really want to know I can't show you that. My arrow is not working. Hold on 1 second. See if I can get this to work. No. Frozen up, Willie. Okay. All right. So what you should do right now, I'm telling you, if you don't know how to sell short, and it's not hard to do. See, most people don't know how to sell short, and that's why 80% of the people lose money in the stock market. 80% lose money, and you shouldn't have to lose money if you only knew how to sell short. But when you put yourself in a position that you only buy, you can't make money because you have to trade to perfection. And there's no traders out there that good. You got to really, just think about it. If you say, I'm just going to go in the market, but I'm only going to buy stocks. That's like saying, I'm going to buy a car. But I'm going to go look at cars, but only cars that have forward, but they don't have a reverse on it. Same thing. Someone's going to say you're going to get killed. Same thing in the stock market. You're going to get killed. So, and the last thing, too, is that no one's looking at the manufacturing jobs. They always hide the manufacturing jobs. Because, remember, we have, anytime you want to know how bad manufacturing jobs are, just look at the trade deficits. Did you see this last trade deficit? $107 billion. Are you kidding me? One of the biggest trade deficits ever. What's a trade deficit mean? And notice nobody talks about trade deficits. Trade deficit means that your economy's in trouble. Your economy is in deep trouble. And that's the bad thing. So when you have a trade deficit, that's telling you the truth. No matter what all these people say on the fake business network, how great the economy is, how everything's wonderful, look at the trade deficit. And then if that doesn't convince you, go look at the bond market. If you see the yields coming down, and if you see yields going down in the bond market and you see trade deficits are blowing up, then don't believe what they're telling you. Learn how to sell short. At least have that skill. So the day we don't go up anymore, you can make money, make more wealth on the way down. Join my gang, philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.